Welcome back. Today we had some pretty disappointing factory orders. It's the M3 survey. It's a manufacturing shipments, inventories, and orders survey, which is created to provide a broad-based monthly statistical data on current economics, specifically in the manufacturing sector. Now, it was reported factory orders fell 2.1% in July. That's month over month. Durable good orders declined 5.2%. Orders for transportation equipment fell 14.3%. Orders for non-durable goods rose 1.1%. So we're seeing here, this is a month over month. So compare this month to the last. Orders specifically, we see the blue line that represents the overall durable goods factory orders. These are indications of demand within the factories. So it's certainly a very important part of the GDP. And we can see the blue line after registering a pretty positive report last month now shows quite the negative. The red histogram bar shows us consumer goods. Those are overall, that's the overall consumer goods sector within factory orders. The black line excludes transportation. The yellow line excludes defense. So excluding defense, we see that line is actually at the worst position, and that really is not good news because the defense typically is not considered to, really contribute to the private sector as much as maybe other industries do. Certainly, it is part of the private sector. But if we exclude defense, we see factory orders are quite bleak. Now, this is on a year-over-year basis, comparing this July. The report is from July, this July to the last. The blue line, that's new orders. We can see it's at the lowest level we've seen in quite a while. The red histogram bar, that's consumer goods. That's probably the most positive part of our report here. The black is excluding transportation, yellow excluding defense. So certainly the bright part in this report today, year-over-year basis, also month over month as well, is the consumer goods sector. The overall number is not good, and especially excluding defense. We like to talk about an X defense because defense orders usually come from government contracts, and that's not very much linked. It's not representative of the private sector. Here we see the black line is the S&P 500. The red histogram bars are consumer goods. Those are manufacturing orders for consumer goods. We can see on a year-over-year basis, we're registering a little bit of a higher high, probably the highest number we've seen in about 4 months or so, but certainly taking into consideration the bigger picture, not that bright of a number. And we can see typically in the past, we'd see strong stock markets that were associated with stronger durable goods. However, the stock market really is kind of falling apart, and it looks like the durable goods orders seem to be mimicking that weakness in the stock market. Here's durable goods excluding transportation, barely positive on a year-over-year basis, and certainly does coincide with, I don't want to say the stock market's falling apart, but it certainly is not doing well considering what it had been doing just a month ago. Durable goods excluding defense, year over year up only 4%. This is one of the lowest readings we've seen in quite a while. And transportation only is shown in blue, defense only is in red. So defense only is just slightly to the downside, just about a negative 1% or so. The blue line, transportation only, that was a stronger segment of our economy, at least in terms of durable goods and factory orders, but really not so much anymore. The consumer goods side is the strongest part, and that is not that strong. Now we compare here left-hand chart. That's 2006 through 2008, and we can see the blue line durable goods, red line excluding transportation, black line excluding defense. Most importantly, we can see 2006, we were registering numbers as much as 10, 12, 14% on a year-over-year basis. Then only 2007, 10% and less. And now 2008, we see really indications very close to zero. Fast forward to present day, right hand side, September of 2021, we were in the 12 to 14, 16% level, the same way we were in 2006, but a very strong decline to the downside. And we can see now the red line, excluding transportation, just barely positive, and today's number again, a real disappointment to be sure. Now, here's something kind of interesting. we take a look at the actual data. On the left-hand side over here, we see durable goods excluding transportation, excluding defense, and then consumer good durable goods. Now this goes back to 2005, and we can see, let's start in the beginning of 2006, right about this level, January 2006. We see that the durable goods was up 7.5% on a year-over-year basis, excluding transportation up 9.9%, ex defense that was also up around 9.1%, and then the consumer side up 5.6%. Well, notice what happens from 2006. As we highlight 2006 through the beginning of 2007, we see here how the standard durable goods fell from 7.5% to only 1%. Ex-transportation fell from 9.9% to 2%, 9.1% to 2.5, excluding defense, and 5.6 to negative 2.9 as of March '07. As we continue, we can see entering the financial crisis, we very quickly turn into severe negative territory. So, point being is that when we see these numbers flirting with a near zero level, it should draw some attention. Fast forward to present day, we see here July, present day. 3.7% durable goods, excluding transportation, up 0.9%, excluding defense, up 3.9, consumer goods sector, 7.3. Again, the consumer goods sector is probably the strongest sector of this report, but nevertheless, we can see a lot of weakness. It's barely holding on to positive territory. Now, it's not to say, again, it's going to mimic what happened in 2007, 8, and beyond. However, this is a very significant part of our economy. The factory orders speak directly to demand, and that speaks directly to the growth we may see in the next GDP number or lack thereof. So, this certainly is something that should raise some concern, and we're going to track this very closely in the months to moving forward as well. We hope this has been helpful. We look forward to seeing you back soon.